that price is 4030.75. So you can see we had difficulty there on Wednesday's trading and on Tuesday's trading, and it was unable to get through that. And I called this specific level in advance to watch that. And because of where it was, the long wick here and all these wicks in here, we were in a period at 7 o'clock last night, at least. We were at a point where I did not have any confidence to side on one narrative or bias for the marketplace going into the morning session or even London. So if I don't have an opinion of what I think it's going to do for London or going into AM session for stock indices, then I have to come to the conclusion that I'm neutral. So a neutral bias is I have to wait for more information. And what information is that? I'm going to allow the 9:30 open, or the opening about 9:30 in New York time, to give me that indication of what it wants to do. So you can see middle of this wick here, that is 3982.50. You hear me mention that at the beginning of the video in last night's Twitter space. This one here is essentially the same thing that's been shown or outlined for this wick. You're getting the middle of that wick measured here. So that's also a level you'll see when we go into lower time frames. And this is the fair value gap I mentioned at the beginning of the Twitter space portion I was showing, or letting you listen to rather. This candle's high on the 10th of January is the exact to the tick low of Wednesday's trading. Now, this is the thing, okay, this is the thing that everybody knows me for in Forex. I'm to the tick, okay, or I'm sorry, to the pip rather, in futures. But I'm also to the pip in Forex. And that's why my analogies with being a sniper trading, you know, kind of like popularized that with Forex and shown executions and shown techniques and concepts that would deliver that. And a lot of my students all around the world are using those things. Okay, order block, smart money concepts, the whole business. The precision that's in futures and in bond trading, you know, 30-year bonds, that it cannot be beaten in terms of precision because it's to the tick most times. Whereas Forex, sometimes I could be off 2 to 3 pips because of the broker spread. Okay, and that's one of the things that was always a frustration for me while trading Forex, is because I don't get the laser precision that I can, and you can see clearly in my examples this year. I'm showing you next level technology in terms of analysis. Stop loss management, stops being one tick away, and trusting the fact that it won't go there. You cannot pull that off in Forex. And I don't care, anyone can claim they can, they will not be able to demonstrate that consistently, because if they're in a live account, the demo won't open to grab their order because it doesn't care. It doesn't see an internal pool of liquidity that most brokers are working through. You're trading through their pool of liquidity because most times those brokers are actually trading against you. And because of that, your tight stop loss, they can open the spread, snatch your order, and you're gone. You don't have that so much in futures because everybody has the same price. That's why I can be confident when I have my stops where I have them, and I'm not worried about it getting close to my stop. Because if it's going to go to my stop and stop me out, I'm wrong, and I'm okay with that. But I know if I'm on side, that means I'm correct about what I'm expecting to see in price. The arrays that I'm teaching you, the algorithm will respect. My orders will be behind that. And you've seen dozens of examples of that. And it's uncanny how it just perfectly operates as one would expect if you want laser precision in terms of stop placement and trade targets. Entries, all those things are communicating authorship. It's communicating ownership. Nobody has Enigma but me. No one can do what I'm doing with this information but me. So I'm showing you this year, everybody out there that has been listening to what I'm teaching or they're not liking the fact that the trading community is warming up to the ideas of the things I'm teaching you and sharing for free and wanting you to be successful with, the competitive side of this business, like anything else, is shady. And they're going to say things, make up things, and claim that they can do something too. They won't ever be able to do what you just seen me do today. They're not going to be able to. Because if they knew what I know, if they knew Enigma, if they knew my algorithm, they would be able to take parts of it like I did last night and explain what I'd be waiting for and how it was going to go to where it was going to go. And you can't beat perfect. This candle's high. I talk about that in last night's Twitter space. I have students that recorded themselves listening to it over a chart, and they posted exactly what I was saying in the Twitter space on their chart on their YouTube channel. So it's transferable. It's not something that's cherry picked. It's not hindsight. It's absolutely on a daily time frame. So I'm teaching you that precision still exists on all time frames. The algorithm is not limited to intraday charts. It's not limited to anything. It's the same price. It has to operate differently on different time frames, and you'll have to submit to obviously longer durations for setups to pan out when you're looking at daily, 4-hour, and hourly charts. But never shy away from willing to be able to engage these markets if you can't be in an intraday basis. Here's your evidence that it works on just daily charts. You can see it forming. You can take setups on a daily chart and just let it pan out. It'll take you time for those positions to come to their targets. But if you're forced to do something outside of intraday charts, you already know what you're waiting, for. It's longer durations. So this candle's high. That was the very low of Wednesday's trading to the tick. It didn't go one tick lower. It didn't come short of it by one tick. It was directly 100% right on, perfectly. And I want you to check your chart too. So look at January 10th. Compare that candle's high to the low on Wednesday, January 18th, 2023. That's perfect, folks. There's no room for improvement. There's no gray area where, it was close, but it didn't get there. I don't play horseshoes, and neither does the algorithm. So we're nailing it. And that's a testimony to authorship. That's a testimony of who knows what, who owns Enigma, who engineered it, who wrote it, who coded it, who's proving it. I am not out there calling things incorrectly. I'm giving you the daily range. I'm telling you where the algorithm is going to have periods of consolidation where it can get erratic. Then once things get in alignment, then I'll tell you where I think the market's going to go based on the ideas that the algorithm will deliver. And let my tweets be the testimony of that. Every single day I'm calling it. Every single day my students are seeing it. They're growing in their understanding. And they're not getting signals spoon-fed to them. That's important, because if you're looking for signals, entry technique, stops, and put me in a trade, I'm not going to be helpful to you in that regard. And I don't have an issue with being hated because of that, or being criticized because I don't put you into a trade. I'm not going to be guilted into it. I'm being as responsible as I can, and also respect my students who trained under me and now are running signal services. So I don't want to encroach upon them, because I would be taking their clientele if I went in here and started doing signals. And frankly, I don't want that. I don't want that responsibility. I don't want the headache. So we also had this candle's low, which is 39.61 and I think 3/4, something to that effect. But you'll see it also when you get in the lower time frames. So that was the dynamic with everything explained in the Twitter space last night. And because at the time at 7:20 p.m., I mentioned that I don't have a clear-cut bias because I have to wait until the morning session. So I had to wait and see what we would see in the delivery of price, because anything can happen overnight while I'm sleeping. Anything can happen, at 8:30, before 9:30, and I'm submitting myself to the process of waiting for the opening bell at 9:30. All right, so here's the hourly chart, and that same fair value gap on the daily chart is being shown here. And the fair value gap is the PD array, and the classification for the fair value gap is a BISI, meaning buy side imbalance, sell side inefficiency. So it was delivered on the daily chart with an up candle, and it would be expected to see the algorithm deliver to the downside with sell side. Okay, so you can see that the low is nailing that fair value gap low right to the tick, and we'll get closer when we go into smaller time frames. This morning, I was counseling everyone on Twitter to be mindful that it is very, very choppy, and the highs were suspect. So even though I like the 40-30.75 level, and we've been talking about it since last week, it was one of my targets for upside last week. 40-20 was, and 40-30, and then if it could breach 40-30, maybe trade up into the 40-40 level. And I was given room for that potentially happening today. What I wanted to see, and this would have gotten me in alignment immediately with going short based on the analysis I gave last night. At 720, because I was not able to give you a clear cut, this is what it's going to reach for. There was no fair value gap to reach for because we were bumping up against that 40-30.75 on the daily chart. So that upper boundary on a daily chart in the form of a premium didn't lend well to go beyond that much for a higher fair value gap. So I would be looking for short-term buy stop hunts over this high here. That was 40.35 essentially. So I was watching 40.36. I was mentioning it today in tweets. And I said it could potentially drive up into 40.40. I mentioned that last week, and it was still on my notes as a potential run above this short-term high. Now, if it were to do that, I would have been looking for that to fail and as a turtle soup, fake breakout and go short, sell it, and look for 39.82.5. That's what I was trying to do. I was waiting for that to happen this morning. And I did 2 trades where I was going in long, and I was able to get a partial off into a buy side liquidity pool, which I'll talk about when we get into lower time frames. But it ended up failing and coming back on my stop, and it took me out on break even on the balance. So it wasn't that big of a deal, but I was proving that, when you're in that environment in between real setups, that I would rather take smaller time frame moves. I can still find those 5 handles, and I proved that this morning. The point of reaching down to that 39.82.5 level, which is this one here, don't be confused with this here. This line is being anchored to the daily chart, the midpoint of that wick, just like this line is being anchored to the previous day, the middle of its wick. So when you do the higher time frame levels and you transpose those same levels into your lower time frame, this being an hourly chart, the lines might look a little differently than they did when you anchored them on the higher time frame. It's not that important. You just got to be mindful where those levels are, because that's exactly what the algorithm is going to refer to. The market doesn't drop, okay?